Welcome to Daily Rates Live with the Mortgage Calculator. We'll wait just a second here to get started. Let us go live on all the different platforms. And we put the chat up on the screen so you can drop a comment there in the chat as you tune in. See some people are already commenting. Hope everybody's having a great start to their week so far. And we'll get started here in just a moment. Great topic here today. We're going to go through some live rates and then talk about profit and loss loans. So give us just a minute to get up and running here on all the different platforms. We're streaming this live on YouTube, Facebook, and LinkedIn. Appreciate the comments there. Adam, Jason, everybody commented and tuning in. All right, it looks like we are good to go. So we'll go ahead and get it started. We're going to take the chat off the screen, but please keep dropping comments as you tune in there, and feel free to drop any questions as well as we go through our deep dive topic here for today. Welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through some live mortgage rates for different programs, and then we do a deep dive into a different topic. Today's topic is going to be profit and loss loans. So because we specialize in non-QM loans, this is something we're very familiar with here at the Mortgage Calculator. So our sales manager, Jose, is going to go through that deep dive topic here in a little bit. But before we do that, let's go ahead and pull up the live rates for this morning. So Nick, if you want to pull up our pricing tool, let's see what the rates are looking like today.
All right, switch my screen. Check it out. So I wouldn't say that there's necessarily good news, but it does appear the treasuries have gone down a little bit. We probably won't see much reaction yet, but by later today or tomorrow, hopefully we see some more downward momentum here. So this is our pricing tool. It will show us the general rates and APR for today. It is October 10th, just after 11 a.m. So the first rate sheets are live for today. And as I mentioned, we'll probably have some more updates throughout the day as the markets are going a little bit crazy with all the news going on. If you'd like a full loan estimate with all the breakdown of all the fees that go in here, get with our team. We have over 400 licensed loan officers in 24 states for primary homes, and we can do our business purpose loans in 44 states. So to compare, as we do every day, we'll set up a basic scenario. We'll set up a $400,000 loan amount. We'll set LTV to 80%. We'll set the desired price to show the lowest rate options we can have. And we'll compare our programs. We're going to check out our conforming conventional, compare that with FHA, and then our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs, such as the topic for today, our profit and loss programs. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are eligible, let us know. Just a couple clicks for us to quote it. And same with USDA, that's only for properties that are eligible. So if you do happen to be shopping in one of those USD areas, let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40. So with these basic settings, let's see what the lowest rate options are looking like today. All right, so this is like the lowest, most reasonable option. We kind of switched up the way we search here. So best option that I would suggest to our customers, 7.25 rate, 2.25 discount points and costs, puts our final APR at 7.458. So for our customers that can buy down the rate or maybe get a little bit of a seller credit, these are amazing options. Now, if our customer doesn't qualify for conventional for any reason, typically the next option we want to check out is FHA. So we'll set up the same exact scenario and select FHA this time. So FHA does have a little more leniency on credit issues, as well as a higher debt to income ratio we can go to. So typically this is the next option if we have any issues. And we'll keep everything exactly the same so that we can compare apples to apples across the APR. So let's check out the lowest options here for FHA. All right, lowest option here, 6.49 rate, 2.446 discount points and cost, puts the final APR at 7.131. So here, as it has been the case for the last few months, FHA, if our customer qualifies for both, FHA actually is a little bit cheaper, even though FHA requires the upfront and yearly mortgage insurance, pretty much no matter what. But that is included in the APR, and you can see it's actually a touch cheaper than conventional. So these are great options for our customer that qualifies for both. Definitely check out both options. And our customer that must use FHA, it's definitely a welcome change there. Now, where we love to specialize is if our customer doesn't qualify for either program. Many other banks or lenders would have to deny that customer. But that's where we have over 5,000 alternatives under expanded guidelines here, also known as non-QM. So when we set this type, we'll keep everything else exactly the same. However, now we can select a new income type. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. That's what most people are used to. So we'll typically choose a non-QM option to take advantage of one of these others, such as asset-related programs, our business bank statement programs, our investor programs are just for investment properties, so not eligible here. Personal bank statement 12-month is what we use for the demo. That's the most popular by far. We also have RSU, stated, VOE, 1099, and P&L, which is our topic for today. So Jose will show you a few different options within here when he selects these options. But for the demo, as we do every day, we'll select personal bank statement 12-month as the most popular option for our self-employed borrowers. Many times it's our self-employed borrowers that have issues qualifying under the standard guidelines and may not qualify at all, or just may not quite get enough income to get that home they really want. So we'll solve that problem by using no tax returns at all, only their last 12 bank statements, to determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax return at all. So most of our self-employed borrowers will qualify for double or triple the income using these methods and can therefore get the property they want. But let's check out the bank statement options this morning. All right, pretty cool option here at the top, which is one of the kind of hybrid options, portfolio options, 7.25 rate, 2.5 discount points and cost, puts the final APR at 7.367. So almost identical there to conventional. And we have a few other options that are very close. Some of these options here a little bit further down the list at higher rates and costs may allow things like bankruptcies and foreclosures and us to get around other guideline issues. So there's dozens, if not hundreds, of different variations of these programs. So please get with our team to find the one that will fit best for your scenario. And before we go into Jose's example with P&L, we want to do a couple quick investment property pricing examples. So we'll set this to investment property, set this to 80 LTV again. And this time we can buy down a investment property a little bit lower. And we're comparing our programs. We're going to start with conforming conventional and then check out our expanded guideline non-QM options. Remember, government programs don't work for investments, so no FHA, no VA, no USDA options. So we'll start with conforming conventional. Everything will stay exactly the same as our other demos. All we've edited here is the occupancy. So let's see the lowest rate options for investment. Wow, amazing. So as I mentioned, usually these portfolio options are, full doc. They use the same guidelines, but these are not what we would call Fannie Mae options. So this option looks so different because it is a portfolio option from one of our partners. 7.125 rate, 3.5 discount points and cost, puts the final APR at 7.375. So a great option. This is the actual lowest rate option for an actual Fannie Mae, which does have different adjustments here, especially for investment properties. So that's where you see our portfolio option. They follow the guidelines besides the adjustments, so the pricing is way better. And the traditional Fannie Mae option does have those adjustments, which pushes the rate up a little bit, 7.75 for 3.5 discount points in cost, and a final APR of 8. So definitely some cool options that we have now where our outlets are getting a little more flexible with our portfolio options. So definitely recommend all our LOs and customers check out those unique options. Now to compare to our more standard non-QM investment property options, we're going to do our final demo for investment property, ADLTV, 96.5. And we'll choose expanded guidelines, also known as non-QM. So everything else will stay the same, except we have to select our income option. The most popular for an investment property is going to be DSCR. And that's because it doesn't require any income or employment or documentation from our borrower. We simply use the estimated rental income from the property to determine a DSCR value. Stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, that's a ratio of 1.0 or higher, aka the property cash flows monthly. We also have options for ratios under 1.0 where the property may not cash flow. And we have options for above 1.0, which is what we use for our demo, 1.5, which is the highest value. So we can see all the options pop up for all the programs. And the final thing we must select is a prepayment penalty. This is standard for a non-QM investment. So we always choose 3 years. So again, we can see all the most common programs pop up. We can select 0. That will limit the amount of loan programs that show and cost more. And same with 5 years. That will limit the amount of loan programs, but does save our customers some money if they want to go with a 5-year option. 3 years is standard, so that's what we use for our demo here today. So let's check out the lowest rate DSCR options. All right. Can get pretty low here. This is pretty smoking. 7.5 rate, 3.475 discount points and costs. So a little bit costly there, but that's our lowest buy down option here for 7.649 APR, which obviously blows conventional out of the water today. So conventional pricing on the investments was a little high, but we did have that cool portfolio option that does beat this DSCR if you want to go full doc. But DSCR beating conventional with no documentation for income or employment is a pretty amazing option. And there's even 2 other DSCR options here you see that beat the conventional pretty much. So absolutely amazing DSCR options we have today that are pretty much blowing conventional out of the water. Also, if you scroll down here, you see we have dozens of other options. Some of these may allow things such as bankruptcies, foreclosures, credit events. Some of these may allow short-term rental income and other variations. So please get with our team to find the best ones for you. And now let me switch my screen and we'll get into today's topic. All right, so today we're going to be talking about profit and loss loans. So when you see me do the live rates, you always see an option for P&L. They are a little more complicated. Bank statement is kind of the more standard option, so that's what we always use for our demo. But today, Jose will have some examples when he selects the P&L options there that are listed and break down how that differs a little bit. So first, Jose, can you just kind of introduce why we would use P&L versus the more traditional bank statement that we always talk about, and then obviously go into the specific examples.
Absolutely. Yes. Well, we have our hierarchy, I guess we'd call it, of income, right? Where we have our traditional, for non-QM loans, where we have our traditional full doc, which would be with tax returns, pay stubs, W-2s, depending on the income type of your borrower. They have variable income, overtime, but it all boils down in this scenario to tax returns, right? Be it for their self-employed income or for their W-2 income, where you're going full doc. Our next tier would be bank statements. Now, note that in many cases, in the non-QM realm, full doc with tax returns and full doc with bank statements are going to have the same pricing, or at most a quarter of a point difference, where the bank statement may be a little bit more expensive. Now, our next tier below that, I guess, would be profit and loss. Now, these are for self-employed borrowers, same as the bank statement option is for self-employed borrowers only. We have a 12-month 1-year option and a 24-month 2-year option for the P&L as well. Yeah, I would tell you, I would defer to the guidelines of whatever option you're looking to choose, depending on what exactly is going to be required from the profit and loss. But it does have to be prepared by usually a tax preparer, be it a registered tax preparer, an accountant, or a CPA. Now, how that actually falls in line is going to depend on the guidelines. Some may say CPA only. So keep that in mind as one of the nuances to be aware of. So the profit and loss loan is usually used as a workaround when the bank statement loan option may have some issues, depending on what guidelines you're trying to fit, whether it be NSFs, overdrafts, declining trends of the deposits, maybe not constant deposits or large deposits that may be unverifiable as business income related, which would kill your income. So a lot of different reasons where basically the P&L would be a workaround for a bank statement fallout. It's the simplest way to put it. But there's usually a little bit of a difference in pricing also between the bank statement option and the P&L option, or they may be, depending on which option that you are selecting. So just be on the lookout for if there is a difference in the price or possibly a difference in the LTV. So today I have 4 purchase options for you. The biggest thing to note here, again, on the non-QM loans, never any mortgage insurance applicable when you are above 80% LTV. So, and the maximum LTV is 90%. So here, our first example is for a 1-unit property, primary purchase. This is going to be the most favorable deal LTV wise, and we are looking at 10.5% as your lowest cost option, and you can buy that down all the way to 9.25%. Now, we love our house hackers out there, so obviously we have to have our 2 to 4 unit option. So let's compare the rates here, because here we have 10.375 as our lowest cost option and 9.25 lowest rate option. I think they look pretty similar. Yep. They are exactly the same, the 1 unit and the 2 to 4 unit on the primary purchase, both 90% LTV, which is pretty amazing for a P&L on a 4 unit, for example. Now we have our P&L of a 1 unit investment property. Now this is with a 3-year prepay. If you opt for a longer prepay, you could get a little bit better pricing. So here you will note, besides the 5% lower LTV, as 85% is the max LTV, you will note that there is a higher cost. Here, 10.875 is costing 1.25, whereas the 1.25 rate on the 1 unit primary was 10%. So you're looking at about a 0.875 higher interest rate and a 5% lower LTV. And our last option here, our 2 to 4 unit investment purchase. Again, we're looking at same 85% LTV, 10.875 lowest cost option, and you can buy it down to 9.75. So as is usually the case, not always the case, but usually the case in our non-QM loans, we're able to obtain the same loan to value and the same pricing on 1 to 4 units across the board, which is a great thing to note.
All right. I don't see any questions here, so I think we can go ahead and wrap it up here. Remember, we do this show 11 a.m. Eastern. Go ahead, Jose. You got something to say?
Yeah, actually, I just wanted to add, to as we'd like to bring up the experience of one of our new MLOs. She was newly minted to the company and pretty new to the business, and she was able to use this profit and loss loan, obviously with the support of the mortgage calculator, all the support that we offer, multiple meetings she had mainly with myself. We were able to guide her through and get a loan that had been denied elsewhere by through a different lender, different loan originator, had nothing to do with us. She picked it up as a lead from her own campaign, and we were able to properly assess the situation and put the customer into the profit and loss loan trajectory, and we're able to close that loan previously denied somewhere else because they tried to push the envelope and go full doc. They weren't able to do it, and we were able to close it in 3 weeks. So that was using the P&L loan at an 85% investment.
All right, still no questions, so we'll wrap it up. We do the show 11 a.m. Eastern every weekday, so tune in. We'll go through the live rates and do a different deep dive topic. So we have a new deep dive topic for tomorrow. So thank you, everybody, tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.